How Congress cut Trump's taxes. He has benefited from every loophole that lawmakers provided to real estate businesses. The House Ways and Means Committee plans to release Donald Trump's tax returns Friday and has already put out a report faulting the former president for paying little or no income tax in recent years. But the fault lies with Congress. Mr. Trump benefited from every tax loophole that lawmakers have made available to real estate businesses. These include deferral of income, conversion of ordinary income into lower taxed capital gains, non-taxable income, tax credits, and artificial tax losses that ordinary taxpayers can't obtain. Entrepreneurs who purchase or construct a building can obtain depreciation deductions, together with deductions for mortgage interest on the loan. Using cost segregation, they can accelerate the depreciation deduction. A large mortgage with a low down payment magnifies the interest deduction. As the property should appreciate in value, it is arguable that a resulting tax loss is artificial. One can borrow against the appreciation to purchase more properties and investments, gaining more deductions. Unlike the rest of us, real estate professionals are exempt from the passive loss limitations on their rental properties. All their rental losses are deductible. Net operating losses can be carried forward indefinitely until used. Gains from selling real estate used in a business or for investment can be deferred indefinitely by exchanging the property for another, so-called 1031 exchanges, usually in a three-way transaction using intermediaries, that resembles an outright sale. Should the seller add equity or debt to the exchange, he can obtain a more expensive property with more depreciation and interest deductions. Property sold at a loss can result in an immediate tax deduction. There are rehabilitation credits, such as for preserving an old building facade. Sometimes a developer will tear down an old building, preserve lower exterior walls at great expense and erect a new skyscraper inside the facade. Credits helped Mr. Trump renovate the old post office in Washington into a hotel. And there is a credit for low-income housing, which might not get built without generous tax incentives. The Inflation Reduction Act of 2022 created new energy credits that can be sold for cash by entities that can't use them because they pay no income tax. Conservation easements provide a triple benefit. The donor gets a large charitable deduction for donating a partial interest in property that he continues to own and use. The donor escapes the capital gains tax on the donation because he didn't sell it. The deduction can be excessive based on highest and best use rather than fair market value. The new Appropriations Act limits this deduction to 2.5 times a taxpayer's basis in property held less than 3 years, but only for partnership syndications, not individuals. A better standard would require deduction values to be based on recent comparable property sales. As a practicing CPA, I've seen how real estate deductions can result in zero income tax for clients with high incomes. These are legal and proper deductions even if they seem unfair. One reason for low tax liability is laws intended to stimulate job creation, housing, offices, all the materials that go into building and supporting them, and the great economic activity that real estate generates for decades following completion. Real estate isn't an easy business. Some investors go broke, while others do get rich and pay little income tax for energizing an economy that benefits us all. The 39-page Ways and Means report, written by staffers from the Joint Committee on Taxation, provides a road map on issues that might warrant examination in auditing Mr. Trump's returns. The report stresses, "We express no opinion regarding whether any adjustment, or increase or decrease in tax, would have resulted if these issues had been pursued on examination." His tax preparers may have to explain why they signed returns with so many issues. Mr. Trump's Form 1040s include more than 400K1 pass-through entity forms and up to 27 sole proprietor self-employed Schedule CS a year, among other complexities. The Internal Revenue Service failed to audit his returns in a timely manner because it initially delayed the audit, then assigned only one examiner, later increased to 3. None of the audits have been completed. Again, blame lawmakers for making the tax code so complex and arcane that it may well be impossible to provide a definitive analysis of Mr. Trump's returns. Democrats propose codifying a requirement to audit and release the president's tax returns. That should be expanded to include every member of Congress. There are not many senators or representatives who sell their vote for money, and it is pretty well known who those few are, Senate Sergeant-at-Arms David Berry wrote in 1933. Berry was promptly fired after a 49-year career. An honest man does not get rich, said House Speaker Sam Rayburn, whose savings after 48 years totaled only $15,000, equivalent of around $150,000 today, at his death in 1961. Other presidents had issues that would have warranted IRS examination. Franklin D. Roosevelt deducted losses from his cotton plantation in Warm Springs, Georgia, and his farm in Hyde Park, New York. Eleanor Roosevelt failed to report more than $100,000 she received from her radio broadcasts. How did Lyndon B. Johnson, whose income came from a government salary, become one of the richest men ever to occupy the Oval Office, worth an estimated $20 million in 1963? Again, that's the equivalent of nearly 10 times that sum in today's dollars. Ronald Reagan used 2 cattle tax shelters to make his 1970 taxes negligible. Jimmy Carter's taxes were sheltered by investment tax credits from his peanut farm, which reduced his 1976 tax to zero. Mr. Trump isn't unusual in aggressively claiming tax deductions, only in being the most scrupulously examined president ever, with no credible allegations yet that he achieved any of his or his family's wealth through corruption. How many members of Congress can say the same? Arnold Schwarzenegger, who also refused to publicize his tax returns when he successfully ran for governor of California in 2003, said, "There's a balance here between what is a prurient interest versus why this data is thought to be important to disclose."